as Nebius gets potentially ready to lose its gains for the day. Lots of candles on the semis going down. Again, this is exactly what happened in the pre-market. We're watching the pre-market. And if you're wondering why Reddit's about to hit 150, it's because
All right.
It's a game. It's literally a game with software and semis. Reddit almost at 149.50.
Nope.
Verizon, that's down 1%. Robinhood's up a little bit. CoreWeave losing a lot of its momentum as well. Why is ServiceNow up? Well, the algos are sensing that semis might be getting ready to go down. Like, it really is hilarious. But at this point, it's happening almost every day when we analyze this stuff and we see how these prices go back and forth. Amazon's still 265. Okay, let's talk about Tesla. So the article last night from the Wall Street Journal came out and said, and I couldn't believe this when I saw this. I was like, what? I was like, this makes no sense. It kind of does make sense, but this is absolutely just something I didn't expect. Wall Street Journal said Tesla is trying to split their China business before the SpaceX deal. Advisors have discussed a spin-off, sale, or closure, while executives have been told to prepare for a potential separation. A standalone China unit would create a regulatory firewall between Tesla and SpaceX, a major U.S. defense contractor, addressing concerns over Chinese customer data. The problem is China accounted for 18% of Tesla sales in the first 6 months of 2026 and houses 2 major Shanghai factories. SpaceX generated 21% of its business in 2025 from the U.S. government. So obviously this merger is going to happen. There's no doubt in my mind that the Tesla-SpaceX merger is happening. In fact, the conspiracy is that Elon's trying to tank Tesla so he can buy Tesla on the cheap, which sucks for Tesla shareholders, but long-term is probably part of his deeper vision. But you can't combine a major defense contractor with Tesla if you have this Chinese part of the business. Now, Elon came out yesterday and said it was fake, which, okay, if you take Elon at his word, that's fake. But it begs the question, and it's a question honestly I haven't thought about for a while, how would you merge the two companies if you didn't get rid of the China business? So Elon can say it's fake because maybe they're not thinking of doing it right now, but logically, I don't think the FTC would allow one of the most important defense contractors in the United States to merge with a company that has a massive part of China infiltrating its business. So it kind of seems logical, like you would eventually have to split up the China business as a separate entity. And I don't know if the market likes that or hates that.
All right.
But that's why Tesla popped last night up to 325. And I don't think it even popped because of the Wall Street Journal thing. It popped because of the idea of the merger. And like this was like a missing piece of the merger that if, you know, the media was reporting on, it seemed like the merger is closer to happening versus like the actual China separation. But obviously Elon said it was fake, and you know Elon might want Tesla to not go up because again he wants to buy it at a cheaper price. So it's one of those things where I don't know. If you're in Tesla and SpaceX, you're gonna have to just deal with the inevitability of the merger and also the rumors over the years of when that merger will happen. Microsoft right there, 457, as that continues to go green. Yes, we did talk about Amazon on basis points tonight, Suraj. Thank you for the super chat. We talked about Amazon, Microsoft, Meta, the Leopold situation. That was the...
Okay, I'm done right there. Give myself a 5-minute clock.
Yeah. You guys will see that.
Let's post here and see how I did.
I mean, look, I thought the Leopold thing was crazy. Steve thought it was less crazy because Steve was like, this is just another person who got liquidated. It happens all the time. And I'm like, yeah, that's fair. You know, he's been around Wall Street longer than I have, so he's probably seen these cycles many more times before me. But I just thought how it played out with Citadel. You know, them literally creating the conditions and like put the knife in his back. It was just cinema. Absolute cinema. All right, folks, we're getting that dump. We are getting that semi-dump. There it goes. Again, got bond yields rising aggressively. Like
Okay, so that's good. Let's check out this.
You got the semis in general that are massive Thursday. They're probably going to get back some of the gains on Friday. And then you've got options expiring today. And so you do have a bunch of factors that could theoretically push some of these names down. But at least they're just not down as much as before. I think you can't say it's a dead cat bounce until next week. I think next week you got to see price action, and price action obviously goes the opposite, and there's different catalysts that take these names down. Then yeah, it's a dead cat bounce. But you know, one day up is not a massive move. One day down from some of those levels is not a massive reason why it's a bounce.
So 1 dot.
But it also is kind of, yeah, I get it. Like if something goes up 30% on one day, it's probably not going to go up another 30% the next day. It's probably going to give back 10 or 15% of it, and that's that, you know, you live with that, so that it's not down 60% from all-time highs as it used to be. Now Roblox down 26 is the street really doubting the thesis on this one. I mean, I get that they missed their users, but that's pretty aggressive. And Roblox has had many of these 30-40% drawdowns. Roblox, by the way, was trading at freaking 150 last year. Roblox was, yeah, 150 in October of 2025. So this one feels like the street got way too excited about a story that didn't really have the massive earnings potential. Reddit going further down from that 148 level at 146. Zeta, 2145. Trying to hold on. BMNR and MicroStrategy's down because of crypto. Oh, what is the ticker for Jersey Mike's? We didn't even cover it yesterday because of freaking Leopold. I literally did not even see this. JMKE is up 3%. Did anyone buy this? $5 billion market cap? Joycey Mike's. Joycey Mike's. Yeah, I don't know. I think if we continue to see the downside move on semis, they're probably a better buy than this, but I've not gone through any of their numbers. Navi's taken a hit. CoreWeave taken a hit. Again, these names are up a lot from yesterday. Navi's went from 140 to 188. So, you know, even if it goes back to 175, that is still a massive, massive move that we saw from the lows. But it does beg the question. It really does beg the question. I'm curious what people have to say. Do we think it was only Leopold and structural deleveraging that caused this sell-off, or is there something more to it? The Amazon earnings makes you think there's not something more to it. This 10-year keeps spiking, folks, which is ugly. Is there more leverage? Is there another Leopold that's getting liquidated again that needs to get out? And maybe, you know, they tried to use that bounce yesterday as a way to stay solvent, but they actually have to go. I don't know. What is going on behind the scenes? Price will tell us a lot over the next 10 days. Maybe it's just oil spiking up again today. AMD back below 500 because, you know, that still isn't good. But I will say, for traders, if they don't see the recovery of these names above certain averages, I mean, I think people are going to just say, I'm out. And I'll wait until these things either recover or prove to me that they are done collapsing. Amazon, though, having an incredible day here. Not really going with the trend. So price action will be really important the next 7 days to see how this ends up playing out. Micron and SanDisk officially go red. And so here's the other thing, right? If you were on leverage on Micron and you almost got liquidated, and then over the past 24 hours you saved yourself from liquidation, and now you're seeing this red candle, maybe your liquidation price was 800 and you escaped that, you got up to 930, you're like, all right, cool, you know, we're done. Now you see it at 870, you know, those stocks start creeping in. I'm like, okay, this gets to 850 and then 820, I'm pretty close to getting liquidated again. And like, you might need some, you know, somebody might say, I'm out, I'm not gonna even risk it anymore. I don't want to deal with that type of pain anymore. And that could also lead to just indiscriminate selling, or selling that's not as indiscriminate because there's something going on. Since again, I think the Leopold thing was the thing that caused a lot of this, but you just never know when price action goes against you after a big blow. NVIDIA 198, still below 200. Still below 200. And this 30 years spiked as well. I feel like it's because of oil. I don't understand. Maybe it's the yen situation as well, but I will say, the stocks can't be up in the 10 years at 4.7. Guys, it's not stopping, by the way. Last time I showed it, it was 4.72. Every little, like, half a basis point move on this thing is a big deal in the credit markets. I mean, if you're locking up money for the next 10 years and you have $10 million, instead of getting 4.5, you can get 4.7. That's a big deal, right? That risk-free, we're not doing anything to lock in that yield. So that's why this thing is so careful to examine and look at. It just continues to go higher. Dixie is at 100 off the idea that the cent's gonna buy some yen. Maybe it is yen carry trade coming back. Maybe it is. Japanese Prime Minister last night did have some comments on inflation, and they're taking off this they're taking off the consumption tax on food and beverages from 8% to 1% for 2 years, starting in April 2027. That was announced last night. The temporary tax cut aims to ease the cost of living pressures from rising inflation, though economists have debated whether it will actually help consumers or further strain public finances. So the 1% rates that they have in the rising inflation, and Japan is not used to rising inflation, is obviously making the cost of living harder for Japanese citizens, not to mention Japanese debt has not necessarily done the best this year in terms of the yields going higher. And then you've got the yen that's strengthening against the dollar. This is how dynamic the markets are, though, right? It's like, first we're analyzing this semiconductor sell-off, then we're going through this hedge fund blowing up, and it's highly levered against AI. Now we got to shift to Japanese geopolitics to understand what's going on with their bond yields. Then you've got this Iran situation that's not stopping. Like, there's so many layers that are adding to the risk profile of risk assets that have to be priced in simultaneously with each other. S&P 500 is about to go red. Something new every day. That's correct. Something new every day. Yeah, honestly, the S&P needs to go down if this 10-year, which is just at 4.74. So what's happening right here is people are selling off their bonds. That's what causes yields to go up. If you buy the bonds, the yields go down. You want more people to buy the bonds, so the yields come down. So you have to give them a less guaranteed rate on their money, which is easier for the cost of financing the U.S. government. And you want people to not sell their bonds because that forces the yields to go higher, which means we have to incur more interest payments to finance the country. And for some reason, this thing is just ticking higher today. Yeah, this is ugly. Here's a random thought off the top of my head. Is there a fund in the credit markets that's blowing up? There was a fund in this, and we mentioned on Monday. I think it was either Monday. No, I didn't stream on Monday. It was Tuesday. It's like, hey, maybe there's a fund in the AI space that's blowing up. I had no idea it was Leopold. There were actually a few people that predicted it might be Leopold. I wouldn't have made that prediction because I didn't think Leopold would be the one to get over levered. But we looked at value advisors or something. I saw some random fund. We looked at their positions. And we were like, these guys looked like they could get, over levered. I didn't think it would be Leopold. It ended up being Leopold. What if there's a credit market fund that's kind of stuck in certain positions when it comes to yields, or potentially swaps on currencies on those yields if they're managing macro trading across the world? Micron really getting hit now, 930 to 865. And I don't know. What if there were long yields or short yields and it's going the opposite direction, and now they need to get a bet? What if Ken Griffin has another person to take out right here? AMD, that one continues to get in. We got to keep an eye on value advisors, dude, because their profile or their portfolio looks just like Leopold's. The difference is if they delevered in June, then they're going to be fine. But greed is a hell of a thing, right? Greed is a hell of a thing. We've all experienced it. We've all experienced it. You all feel like every time you make a good trade and it goes up, you just feel like you're the smartest person, and it's not going to go down. It's like, it's the humbling part of the markets where it's like, no, man, it's not how markets work. Things go up, things go down. It's the gravitational pull of the stock market, and sometimes you got to delever and get the hell out. And even if you don't get the exact bottom or exact top, it's just important to not be that greedy. And the best of the best fund managers in the world get greedy. So maybe we're going to see that happening in a variety of other different funds that were levered into these semi names. Wow, Amazon, are we 270? We stopped at 269.99. Let me check the resistance at 270 right here. What do people think? How many shares do you think are at 270? I think here, before I check, I think it's like 150,000 shares. 270, 201,000. Okay, so that's a decent amount to break through. The 201,000 is not crazy. To get above there. Hollis says, I shorted SPY at the top today and sold way too early. Missed out on an extra 300%. profit. Oh, so are you shorting with options or just equity? Assuming you're doing with the 0 DTEs. Yeah, look at that, 746 to 742. You're playing a 0 DTE put right there. That'll definitely go up 3x if you're right on the timing. Reddit just continues to get demolished. There's got to be something more in the quarter that I don't know about, folks. Whatever I read, tried to give the best explanation I could for why it's down. SpaceX down 2. SPY puts, okay, makes sense. Amazon, someone needs to buy 210,000 shares to get this back up. Google's 3. Google should be up. Honestly, this was the most confusing part about Google's earnings in the context of Amazon. Google absolutely should not be revisiting 320s if they're going to let Amazon hold 270. Reddit didn't address the Google licensing deal. Yeah, and if that's the reason, then again, I think that's bullish. Because if that's the reason the street's upset, a $60 million deal, they're going to overlook all the results because there's a licensing deal that Reddit probably doesn't want to review for a measly $60 million. Okay. We bought it at 142 in May. It's at 143. Like, it wants to get after a massive earnings. But it's also in the software space, and to be honest, software companies are getting no rope if they have a bad quarter. It's just this wasn't a bad quarter. PayPal, that's down a bit. SoFi, that's down 3% as well. Monolithic Power has crushed it yesterday. They're up 10% right here. They were up a lot more, which again, a lot of these names giving back a decent chunk of gains, but they still were up and had a great Q. GoDaddy's down 24%. I didn't look at their earnings, but I would imagine domain names is not that great of a business anymore. There's so many websites that... Is that all they do? They do anything else? Website hosting? I guess website hosting is important, but there's a lot of companies that do it. Website building is absolutely not a business anymore. I still don't get the Wix thesis, by the way. I don't get it, dude. Like, Wix down 7%. Claude built me a website over the weekend in 2 hours, and it was like the most perfect thing I could ask for. Like, it's unbelievable. I don't get AI website building stocks. Or why they matter when you have some of these other things that are out there. Chime cuts about 150 employees. Okay, so we got some layoffs here. This company went public last year. As it's getting down. Paul says Reddit's getting killed because the market is pricing in their success only because Google search and they will die without it, which is not true. Their search traffic was down, I think, slightly in the queue. So maybe there's an argument there that Google search is becoming more AI rooted. It's not. Yeah, so Steve Huffman says search referrals were choppy in the quarter and traffic was more volatile. Later in the quarter, the commercial business was strong. I don't know if search is the biggest part of their moat anymore as the company continues to grow. But yeah, maybe the market's like, hey, if Google search is going to stop giving referrals to Reddit, traffic's going to go down, and then boom. That's our bear case, which... And I guess you could make an argument for that, which is why they probably want some AI licensing stuff, right? Because if they're going to lose the search revenue, then the search referrals, then... I think that's the best bear case. If they're going to lose search referrals because Google's going to be so AI-oriented and they're not going to recommend them in Gemini, then Reddit needs AI licensing to combat that. Maybe that's the actual argument, and I think that you could say that's a legitimate argument. I don't know if that's the best argument, but it's a legit one. I still think it would be a dip buy just on the earnings potential from that argument, even if that's true. Amazon, we broke through 270. There she is. All right. Thank you to whoever bought the 210,000 shares that were sitting at 270. Hopefully we can hold above it. Boom, we just lost it, but it was there for a second. Consumers, we just got that. Let's see if that's causing some pain on the S&P right here.
Final read, that's what we're looking at for July. Headline number mid-month was 54.4. This comes in at 55.2. That will be the best level since Feb of this year. And if we look at current conditions, very similar in terms of expectations, 54.8. But in the rearview mirror, it was 54.9. So we lost the 10, but it's still the best level since March. And if we look at the expectations, expectations, 55.4, well above 53.5 we were looking for, well above 54 in the rearview mirror, best level since February. Now let's go to the inflation numbers embedded in University of Michigan. The one-year inflation indicator, 4.2. Mid-month read remains exactly the same. 4.2 is the
Not too
latest
shabby.
inflation going back to March when it was under 4%. And finally, the 5 to 10-year inflation outlook remains at 3.3%, same as mid-month read. That is the 1, 2, 3, 4th 3.3 of the year, and it would be the lightest since we were 3.9, and that was in May. So the numbers definitely improved a bit on the actual confidence numbers. Pretty much sideways moves on inflation. Rates are elevated. Look at crude oil again to the upside. Currently 429 2-year is up 4 on the day, down 4 on the week, but the curves had moves. The 10-year is up 5 on the day and up 5 on the week at 473. It's starting to dip a bit below that level. Mike, back to you.
Could be interesting weekend, month-end prints there, Rick. Thank you very much. We have breaking news out of the Fed. Steve Leisman has it for us. Hi, Steve.
Hey, good morning, Mike. Yeah, Dallas Fed President Laura Logan out with her statement explaining her dissent in the meeting on Wednesday, saying inflation is not on a sustainable course to achieve the 2% target. Quote, prices have continued to rise too rapidly.
This might also be the reason, folks. You got these Fed presidents continuing to explain why they think we need to hike. I mean, if the market price is in a hike for September's meeting, maybe that's got to play a role on discounting some of these stocks as well.
Third statement we've gotten from three dissenters that we had, along with Neil Kashkari and Beth Hammock. Inflation, Logan says, is trending towards the mid-twos, and risks, she says, are to the upside. Job market is solid and perhaps strengthening, all of which, she says, gives the Fed room to address the other side of the mandate, or the inflation side of the mandate. When she looks at the labor market, household consumption, as well as financial market conditions, they indicate to her that monetary policy is not restraining the economy, but she thinks some restraint is necessary. Without policy restraint, she says, inflation will continue to trend above target. And finally here, she says modest actions in the near term here will reduce the need for sharper action later on. Just reminding you what Neil Kashkari from Minneapolis said earlier today, is he increasingly believes that monetary policy has a role to play in addressing supply shock. So even if it's just a supply shock, he thinks the Fed ought to act. That Hammock said earlier today, inflationary pressures are coming not just from the supply side, but also from the demand side. Those three wanted to hike rates, Mike. As you know, 9 folks voted for keeping rates the same, and this is the sort of thing that people had wanted from Fed Chairman Warsh, but didn't get. And so the question is, who's leading the narrative? I would say I would give all of these statements away for one statement from Warsh about what he thinks about all this stuff.
Yeah, not sure that trade's on the table, but it is true that if he doesn't want to do that, look, others will do that, and the market's going to have to, kind of feed on those things. So.
All right, we are seeing a little bit of the dumpy dump. Look at Amazon, 270.9 right down to 267. I think it was going to be hard if the S&P were to go red, Micron were to lose almost $100, about $90, 5 minutes for Amazon to be the one that completely breaks out to all-time highs. So it kind of makes sense. It's getting hit right there, but it also is what it is. If everything else is getting hit. Reddit trying to get a bottom at around 140. Roblox not finding a bottom, down 30%. Nvidia losing it all. SpaceX, this thing just needs to go below 100. Like, this needs to get it over with. I don't even know who's buying it here. Who the hell is buying this here? Like, why? Who's actually just... Like, I can understand people trading it here. But if you know it's about to get destroyed with the amount of shares coming on, and they got $1 billion contract on Wednesday, market didn't even react. It was 1.9 billion from the government. Market didn't even kind of care. Because, like, who cares? $1 billion contract on a $1.5 trillion market cap with 4% of the shares outstanding. I feel like that one's just going to be ugly, and I hope it doesn't take down the rest of the space names. But Rocket Lab loses its entire pump today. SMH loses the pump today, so the semis go red again. As I said on Wednesday, we're either seeing a V shape like March 30th, or we are going to be in 2022. I really feel like it's one or the shape. You can have some red days in between, but we need to really see.
Oh, nice. Okay, all hit today.
If not, then it might be a stair step down, at least for the next few months, just like 2022 was until we bottomed in October. Some stocks bottomed in October of 22, but there were some stocks in December that, like Palantir bottomed in December of 22. The SPY bottomed in October of 22. But ultimately, after the midterms is when you got the bottom. And then 2023 was one of the best years we've had, and then 2024, 2025, it started that entire rally. I feel like it's one or the other here. Rocket Lab down 2. Amazon 267. All it says as soon as I buy back my SPY puts, I know it's the bottom. I ran 35 from 42. You can't blame the forced deleveraging. Reddit loses 140. Yeah, I mean, the software names aren't even benefiting from the semis going down. That's kind of like an everything dump. That's not even a sort of like software up, semis down type of day. You're seeing everything just feel it. Broadcom, that's down 2%. Qualcomm's earnings were not good. We're gonna be honest. We talked about it yesterday, so it makes sense why that's going down. Well, let's see where the bleeding stops right here. Let's see. You bought a little bit early in the day. Let's see how some of these names react over the next hour. How deep they want to cause the pain. Microsoft's still holding 458. Amazon's still holding, what do you call it, 265. I mean, look, the question here now becomes, which of these names have the fundamentals that you want to own more of? And Shopify, a Reddit, a Zeta, any of these software names. A lot of the fundamentals I would want to hold literally for the next 5 years. It's really important to remember this. I feel like I have to say this over and over again to remind myself and everybody. This is like this one. I asked the question on Tuesday. Does anyone remember the question? It was a very important question. The question was, for those that are buying Micron, would you actually hold it for 5 years? I'll tell you right now, I would be able to hold Shopify for 5 years, Reddit for 5 years, Zeta for 5 years. Through the ups and downs, I would sleep like a baby owning those names, as long as I'm not on leverage, for 5 years. I don't think I could sleep a week owning Micron. I'm sorry. I not only do I not have the conviction, even though I understand the story, I can't take that volatility, and I don't know in 5 years if these guys are going to be putting up the numbers that, they're putting up right now. Reddit's not going to be growing 70% in 5 years, but I know it's going to be around in 5 years because I believe in the business. Same thing with Shopify. So it's one of those things where when you're buying the dip on a lot of these names, unless you're short-term swing trading it, which is fine. Maybe Micron's a really good buy right here. Nebus is a really good buy right here for another 10% move on the bounce. But like, can you actually own those names? And I think that's a really important question that we got to remind ourselves because, like, I could hold Nvidia for 5 years. I think a lot of people could hold AMD for 5 years. Can you hold AXTI for the next 5 years? Though it's up 70% on the day, which now it's up 20%. I mean, like, that's crazy, bro. 70% to 20%. I don't want that volatility in my life. I'm sorry. I'd rather have a software company that I know is going to produce some really good results, or a large cap semi that I know has a moat. But if you can't hold it for 5 years, then you just got to be a little careful adding to the position, unless you're confident you can get out by 2028 or 2029. But then it begs the question, right? Like, do we get back to those levels in a meaningful way? And, if the AI build-out is real and everything, then we probably do, but it's not necessarily a long-term investment. Rivian right there, that's down 6. I can absolutely hold Palantir for the next 5 years. I mean, I've said this before, but if I had to pick one stock for the rest of my life, give me $10 million and bet one stock for the rest of your life, you can't look at it, you like wake up in 30 years, it's Palantir. That's my level of conviction. Now, some people that might sound absolutely crazy. Some people might agree, but that is my conviction on that name. And so it is what it is. That's my conviction, so that's what I believe in. But that's why if I buy it at 130 or 128 like I did last week and it goes down to 120, it's like whatever. I don't really care. But if I buy Micron at 930 and it goes to 840 and I don't really know why I bought it at 930, then you start getting those jitters. Especially if you bought it on margin. Chad agrees with me. Chad, I wonder why you agree. You know, Chad was the first person from Palantir that actually talked to me from the company. Ileana was in April. Chad was in February of 2024. He messaged me on Twitter. He's like, bro, did you like? He's like asking for help on one of the videos he was making. He like legitimately was the first social media intern for Palantir. He was making these like Super Bowl videos on AIP. And I was like, oh my goodness, Palantir employee. Just asked for my advice. Hold on, like this. I was geeking out, bro. Got off the call. I was like, oh my goodness, this is the best thing ever. And now Chad is one of my best friends. Social media manager, yeah, basically. But anyway, the point is like if you're buying the dip on some of these names, as much as it's ugly to buy the dip on a Shopify down 3%, I think more people will be entrepreneurs and make stores and sell their products.
All right, 15 more minutes here.
I don't know what NVIDIA's Feynman specifications are going to be, or whatever the new chip they have in 3 years for memory, and if they've innovated a solution to not need as much HBM. Like, I don't know. I know in the next year they're definitely going to need more memory, but I don't know in the next 5 years how that's going to play out. Reddit continuing to get demolished right here, down 23%. ServiceNow basically going right on the day. Tesla 302, that's down 2%. I think Tesla's going to be around 5 years from now. It's going to be really important. But my level of conviction in Elon's ability to actually compound earnings and his incentives, quite frankly, with SpaceX, it's not really there for me. And so, you know, that's kind of how I ultimately think about this long-term investing thing in the context of these dip buys. But yeah, absolutely, we are seeing these get obliterated from the market open peak. And again, if you were up early this morning, it felt a little weak, man. Micron pushing 950, then fell below 900 in the pre-market, then bounced back above it. It just didn't feel like the type of Wednesday or Thursday pre-market bounce that we saw. Nebius 185, that one continues to get hit. Was yesterday a fake day? No, you can't say yesterday was fake because Nebius was at 140 yesterday, and then it ended at 188. It's at 186. Like, I get that we're greedy and we want it to go up even further because it's down a lot from where it was for the past month, but I don't think you can say yesterday was fake until we seriously lose certain levels on these names. Hollis says he's buying SPY puts, probably bottom now. All right, Hollis, we're hoping you are our Leopold sacrificial lamb to give us a bottom for today. Baba's up 4%. So just bought Iran. Would you buy Iran right here? You know, it's funny you asked that. I was looking at Iran's numbers last night. I actually do think if we're looking at the neoclouds, this is probably one of the cheaper ones that's out there. It's the lower quality ones, and don't kill me if you're an Iran shareholder if I say lower quality. I think it's pretty objective. Nebius and Corey are higher quality. They've just gotten more deals. They're not giving their CEOs free shares for doing nothing. Sorry, I own Iran, so don't kill me, but it is what it is. Don't really like that the CEO is getting billions of dollars worth of stock and not really producing much. But I do think they have the ability to get one or two deals and change the entire situation. This is a $70, $80 stock. But also, you need the semis to participate there, right? Like, Iran's not going to $70 if NVIDIA's stuck at 190, right? Like, and if it does, it's purely euphoric. Like, you need the large cap semis to participate when the smaller names. You need the TSMs and the Broadcoms and the NVIDIAs to actually do stuff. Otherwise, it's pure euphoria. Like, if these smaller picks and shovels names, like AXTI, that was up 70% today, and NVIDIA's barely up 1%. It's like, well, what happened that was so special with AXTI? Yeah, they had a good earnings. But what likely happened is that they have 60 million shares outstanding, and you had a big earnings bump. And so it popped. Not because, like, something changed in the age of AI with photonics that is so important that AXTI deserves to be up as much as it is, right? And then now you're seeing the drawdown here. So I feel like the large cap semis matter so much to see things kind of go forward. Actually, imagine if SPY, if Amazon was down today. Yeah, I mean, honestly, that's a great point by Nick. If Amazon was actually down, like not up 15%, SPY would be down a full 1% right here. I mean, it's already down 0.5%, probably down more than 1%. Amazon's, I think, 3.4% of the S&P 500. So that would have taken a pretty big hit. Reddit Street's obviously upset about this surge thing. By the way, the price targets and the sell side came out and they said, buy it. Guggenheim says 255. They say, note that U.S. daily active unique saw a similar algorithm impact in the fourth quarter of 2024. 2024, with traffic subsequently recovering and domestic users ultimately growing 11% since. We expect this model tension to persist as search referral traffic remains volatile and company-specific engagement initiatives progress. However, they're saying even with the search referrals going down, financial results show that dollar-weighted engagement continues to grow, underpinning our model confidence despite occasional quarterly BAU noise. Adjusted EBITDA margin expanded 900 basis points year over year, implying further improvement. Management also lowered their SBC guide from high teens to low mid-teens. Capital returns stepped up materially with $235 million of repurchases. I mean, it's a $30 billion company, $26 billion company, growing 70%, EPS above 178%, buying back $230 million worth of stock. They're buying back 25% of their revenue in a quarter in stock, having SBC come down. And the street's upset over an algorithm switch on search referrals that happened in the fourth quarter of 2024, which we saw how good 2025 was for Reddit. So, yeah, sometimes you gotta ignore the noise, but if you're gonna buy the dip on a stock like Reddit today, it's also like, do you actually want to own it? And I think that's an important question to ask in this market right now, because it will absolutely test how much you want to own these names. Google continues to go up with Mr. Amazon. Google right there, 346. Where's this 10-year? Let's keep an eye on this. 4.72, so still pretty high. We need to see the thing at least get below 4.7, which would really aid to a reversal intraday if we actually were to get it. SanDisk, very small. Little rebound right here, 1187 to 1230, still down 4%. And Hood, unfortunately, seeing some more pain. I mean, consumer sentiment wasn't horrible. Maybe that was like a knee-jerk reason for why we lost 270 on Amazon. In fact, consumer sentiment has been amazing. Like, these companies, every consumer company you look at, the consumer's willing to keep spending. Moderna had a good earnings today. They beat EPS by 40%. That stock's down 1. Exxon also had a relatively good earnings today. That stock's down 3. Obviously, energy is really good for them all year. This is a great point by Pre. Citadel validated the AI trade. So I think there's a nuance to this. Citadel buying Leopold's book for, call it 50 cents on the dollar, I do think somewhat validated the AI trade. And again, Citadel's been trading these AI stocks for the past few years now. But if they felt like getting Nebius at 140 and Bloom at 160 was a good deal, which I don't know if those are the exact numbers, but roundabout, then they're going to flip them higher, right? They're going to want to own them. I mean, if they were going lower, they obviously wouldn't be happy to buy those names. However, they might manufacture a little bit of a pump now, just like they manufactured the dump on Wednesday, to be able to potentially unwind those positions. And that's the nuance. So it's validating that they want to own those names. And if they hold long, it really validates it, because they're like, hey, these are great opportunities, and these assets don't deserve to be where they were on Wednesday, even though we caused them to go there. But if they're going to unwind those positions, and
Okay, so it's growing.
To create the liquidity to get out of it, then that's a different question. And it's about 15, 16 billion bucks that they have to unwind if they are going to get out of it. So I think that's the nuance I have to see around how Citadel approaches this. Yeah, or they sell them into pumps, exactly. I think one thing is being proven to be very true, that like the volatility will test your conviction. And again, it's easy to have conviction on Meta and Microsoft and Amazon because those are easier names. It's not as easy to have conviction on Reddit or Marvell, right? Or these names that they're not the most important companies on planet Earth that will persist through everything. But I mean, for everyone who got Microsoft under 400, I had a little bit around 380, 390, bought a little bit at 413 back in April. There you go, it's up, right? Like one of those things where it's like, it is Microsoft at the end of the day. I think a majority of us have a conviction on Amazon, which I only started buying at 215 to 230 in September of 2025. That's when I put out my first actual post of diligence on Amazon. I mean, it hasn't massively outperformed. Obviously, like a Micron has done better, SanDisk, all these semis have done better, but for the comfort of holding this type of name, it's up 50 to 70 bucks from where a lot of people got a chance to buy it. And it's given many dips throughout the year. Now, if it loses this pump, it's going to be annoying once again. But these are the names that are really risk reward, whereas CoreWeave's not the easiest to hold, but the risk reward on this, fundamentally is a lot more asymmetric. Do we have someone on CNBC talking Reddit? Let's see. We can hear from them. No, but we have an this Anthropic we're going to talk about today. Okay, so let's pull this up. I think we have that Reddit interview later. But yeah, this Anthropic story around cybersecurity also. Maybe this is the reason we're seeing a little bit of sell-off as well, but it definitely just means there's going to be more investment in the cybersecurity ecosystem. It's probably good for CrowdStrike.
Three cases where its AI agent Claude accidentally hacked real companies during what was supposed to be cybersecurity testing. Anthropic didn't say which companies were involved. It does argue that this was an issue with the setup for these chats. So the AI model, according to Anthropic, they said that they thought it was in a closed environment. So they thought they were essentially attacking a simulated target. Turns out that was not the case. These were real companies. Anthropic does argue the incidents were the result of a testing environment failure, and researchers basically left a door open and all that. They claim it wasn't AI going rogue or breaking out here. Anthropic said they started this, quote, retrospective review after OpenAI's incident last week. They say they ran 141,000 evaluations as part of that and then encouraged other companies to go out and check their own AI agents as a result. This was all kicked off by OpenAI in a separate and in some ways similar issue just last week. An AI agent escaped a
Big
contained
boom.
environment. It was also being tested, and then in order to find answers to this evaluation, it hacked into another startup called Hugging Face. It also
That's crazy. The AI is hacking itself, and that's actually crazy how sophisticated and advanced it's becoming. But also, it proves kind of why IBM missed earnings, because they have customers that are realizing this stuff is real. And instead of spending on IBM stuff, they ended up spending more on cybersecurity.
we found out later breached another company in that process. OpenAI at the time called that event unprecedented, but it does underline this entire cybersecurity risk, guys. As the capabilities get a lot better in AI, these testing environments and sandboxes can clearly create real-world risk, which is part of the worry around this. It is a challenge also for Washington, where Sam Altman was this week meeting with policymakers, and it is fueling this debate about how do you regulate AI, including some proposals out of Congress for a possible kill switch. Back to you.
If anything, it proves that as the models get more sophisticated and as companies try to necessitate what they're going to do with the models getting as strong as they are, it is going to call for more support from regulatory bodies and obviously from the frontier labs themselves. CrowdStrike, right? Not actually catching the bid on this. Palo Alto as well, down about 1.5%. But it likely also gets the market to think more about where security is going long term. Amit, have you seen War Games? Yes. 1983 classic. I think that was an incredible movie. I think it's really, really relevant in the context of the AI story that we're living with. I've always been a fan of thriller and sci-fi films, to be honest.
Yeah, it's tough. Tough.
Yeah, I think that's important to bring up. Reddit 23. Let's see if we can get somewhat of a relief right here. Let me check the other price targets on the Reddit. So the average price target still is 219. Oppenheimer says 200. Wedbush says 221. Piper Sandler says 195. Morgan Stanley says 240. They all reiterated it this morning. Justin says 225. Yeah, the sell side's not buying into a DAU miss because of a search referral traffic issue. So now we're just going to see how the market ultimately continues to think. And Robinhood also shouldn't be down, dude. Robinhood, that's not a quarter for this stock to go down on. That is pretty unbelievable to me. But right there, down 2%. SanDisk now down 3% still. 3.7. Have you guys seen that movie, War Games? It's a good movie. 1983 classic. Hour 54 minutes. It's a good movie, man. It's a great movie. Do you use Seeking Alpha? Yes. I don't read that much on Seeking Alpha. By the way, Hollis, I think your spy puts were the bottom, man. Everyone say W Hollis in the chat. I think your spy puts. Let's see if we can hold 740. Maybe you helped us bottom. I don't read that many articles on Seek Out anymore, but I use it for like earnings estimates and stuff. Unless it's Steve's articles. If it's Steve's articles, I read them. 740 right here. 138 on Reddit. Nvidia 196. No one remembers the duration like that. You guys don't remember the duration of your movies? What? So you don't know how long Interstellar was or Inception? Like, that's just weird. If you're gonna be there for an hour and 54 minutes, how do you not remember it was an hour and 54 minutes? What type of logic is that? Nebby is flipping green as well. Again. Oh, Spider-Man, I have not seen that yet. Was it good? Tom Holland's in it, right? I don't understand how they have a new Spider-Man every year. Like, I thought that the Tobey Maguire ones were like, it was 1, 2, and 3, and that was it. And like, the third one was in 2007. And every year they have a new version of Spider-Man. So I want to go watch it, but I'm like, what is happening? Like, there's always some new version of it. I don't understand how many times they're gonna use the storyline to create it. Did you guys like it or not? Seems like some people here liked it. It's not every year. It feels like every year. Bouncer's still red. Micron, nice little bounce. 828 to 850. $30 bounce right there. $22 bounce. Let's see if that can flip green though. Did you watch The Odyssey? Yes, I actually liked it. I wouldn't watch it again for a while though, dude. It wasn't one of those movies you watch twice in a short period of time. It was still a phenomenal movie. But I do encourage people. I think it's done $1 billion in the box office, so it's very close to $1 billion. Their budget was like 250, so made 4x on the movie. I didn't see it in IMAX. For those that are seeing it in IMAX, that should be very fun. So Trump's gonna be live in 30 minutes. Iranian foreign minister discussed regional developments and bilateral relations in a call with his British counterpart. Okay. Yeah, Bloomberg. U.S. Treasury yields climbed across the curve after Fed officials defended their call for a 25 basis point hike. Okay, so that's actually making a lot more sense. Like if like seeing the 9-3 vote probably wasn't enough, as Microsoft's about to flip red right here, for getting the bond yields to go up. But seeing the explanation and the conviction that Hammock and Logan have on their 25 basis point hike call is probably getting the credit market to front run an expected hike. Do you think they might do it? I mean, if we're done with the Iran situation, which we're nowhere near done with, but if we end up being done with it somehow, I mean, theoretically, the rate hikes would be resolved because oil would go down, but if we have to now navigate the Fed, if Iran is done, even though I think they're intertwined because, Iran is done, oil prices come down. But that is, and then we got this yen situation to navigate. There's just, at least we got big tech earnings out of the way. That was the most important thing. Service now down 1%. And as long as market is happy with those, now you just have external things to deal with. Wow, Amazon coming back, 271. Interesting. Microsoft fairly green, and Amazon making new intraday highs. Interesting. I have not seen Obsession yet. I have not. Dude, I got back from New York late last night, and like I just sat down on the couch for the first time in 4 days, and I turned on the TV, and I clicked on YouTube. And I was like, I know I'm only going to sit here for like 10 minutes, and I'm just going to go to bed. Like, I'm not even going to actually sit here and watch something. The first video I click on, I just like, it was how I winded down, bro. It popped up in my feed, okay, so don't judge me. It was this dude getting a head massage, and like, don't judge me, but like, it was relaxing. it was incredible. I felt more relaxed. I was like, all right, I'm ready to go to bed. Like, it was great. So that's why I haven't seen Obsession or any of these movies, because whenever I have free time, it's 5 minutes of. Just don't tell me that like doesn't make you feel a bit more relaxed. But it's like when people, it's like when I'm hungry and you're watching like people eat, they ASMR eat. Like it's not that crazy, and it popped up on YouTube. That's not my fault. That's the algo. And by the way, I watch basically market and political stuff, so I don't know how the hell that got in there. But I got in there, and I said, that looks like a hell of a massage, bro. Looks good. That was 5 minutes, and then that was it. I'm serious. Like you type in head massage on YouTube, you're gonna feel more relaxed. You'll feel more relaxed. Reddit down 22, but maybe the bottom at 135 has been put in. Ford losing a lot of its pump from the earnings. Western Digital, that's up to, where's Seagate? Are we still at 800? Seagate, 860. Wow, Seagate had a hell of a move. This thing was 650 2 days ago. Topped at 921 for
Oh,
now.
big green momentum.
That's what you've got right here. Dude, it was the algo. I don't know what you want me to tell you. It was. You might get pinged again for that Grindr CEO. Dude, they messaged again. They messaged again 2 days ago. Like, hey, Amit, just following up. Oh my goodness, dude. I don't want to be rude and say I'm not going, but I also don't want to respond to this. When they follow me on LinkedIn, I'm like, oh my gosh, dude, this is getting crazy. Amazon, 272, 20 cents away. Let's see. Okay, so what do we think Trump's gonna say in this meeting here? Obviously, Dissent and all these guys will blaze him and say he's the greatest person on earth, and everything he's done has helped the American people and has kept us safe and all this stuff. Remember last time he got into a 25-minute story about a Sharpie? You guys remember that? It was literally 25 minutes about a Sharpie. I don't even remember the context of the story, but it was about like the Sharpies that were made in the United States or something. He was bragging about manufacturing it. I wonder if we get that here. But I don't think we're gonna get anything that calms down the Iran situation. Dell, buy a Dell. Where's Dell here? Dell holding above 400 is important. But that one still got hit pretty hard last week. Yeah, the quality of pens. We gotta find that moment again. It literally lasted like 20 minutes of him talking about that. Spy flipping a little green here. Okay. Let's go to Gil Loria, see his take on what happened with Amazon and Apple.
Maybe some actual disappointment with some of the elements of the guidance. How do you read it? It's both things. Everybody crowded into Apple because it was the one stock you could own and you didn't have to figure out who's winning in AI. Regardless of what model we use, we're going to use it through an iPhone or a Mac. That's why everybody crowded into Apple. Apple was supposed to have at least one more quarter of very high growth in September, and they just guided that their growth is already decelerating, right? Their biggest problem is that they're going to be comping a very good iPhone here. An iPhone of...
Again, who is going to pay a 42 times price to earnings for Apple with growth that's decelerating? Like, I love Apple. I think it makes sense. It'll be a much more valuable company in the future. But, like, when you look at the Mac 7 ex Tesla, and then Apple's multiple, and then the growth rates, I mean, you only buy it if you're afraid of the capex. Outside of that, like, AI Siri, there hasn't been some, like, massive tailwind to the business in the context of AI outside of an iPhone supercycle and the Mac Mini demand going up that makes you think, yeah, I want to pay a premium for Apple's growth here.
20% growth. They haven't had that in 5 years, which makes next year tougher. But they were supposed to have one more good quarter in September, and they got it down. They said that they're not, they have supply constraints, FX headwinds, and then the memory prices going up are limiting their margins. So that's the disappointing outlook there. And again, because everybody was crowded into Apple, and now everybody feels like they can move back into Amazon and Microsoft. That's the rebalancing you're seeing today. It's a little bit of reversion to the mean. From Apple and Google were winners.
Stream for 5 more minutes and then I'll hop off.
We're reverting to the mean right now.
What do you think as translate that into a return on investment?
Yeah, it was the best articulation yet of why these companies are pouring so many resources into the data center. If Google a week ago really failed to do that, talked more about increasing the capex than the returns they're getting from that. Microsoft did a little better yesterday, a couple of days ago. Amazon did a great job of saying, hey, look, we just grew our business 37%, a huge acceleration from last quarter, and we're doing it at far higher margins than we used to have. We have 25 billion of AI revenue. We get 2 to 3 year payback on 6-year chips. So we are clearly getting very good returns on this investment, which is why we'll continue to invest. By the way, all the data centers we're building through 2027 already sold. We've locked in the margins, and we're selling into 2028. That was a very good articulation of why these companies are investing in data centers, which is causing relief across the board for all three of them. And market volatility aside, it should flow into semis as well. Because if these companies are continuing to invest through 27 and 28, we know what they're investing in.
Yeah, Gil, I mean, the story that these companies are responding to genuine demand signals, whether it's the rental rates or the backlog in terms of taking up capacity, remains kind of reassuring. But I do wonder, what the people who are booking all of this compute, what they're responding to. If it is just, we're in the research mode, we need to build models, we have to go as hard as we can as long as we're allowed to. I think that's one of those questions that seems to hang over this trade, which is there a destination we're heading toward where it's going to be rationalized and the investor, the cloud platforms can kind of halt and let kind of the sort of benefits of scale accrue to them?
Yeah, so let's talk about how demand is flowing through right now. So OpenAI and Anthropic combined will have more than $100 billion of revenue this year. That's up from zero a couple of years ago. And that is true demand. That is consumers and basically all companies saying, I am willing to pay this much for AI. Now, at the enterprise level, some of it is experimentation, but that experimentation is happening because there's very broad conviction that these tools will make us more productive. And if we as a company don't embrace them, our competitors will, and they'll do better than us. So there's a very broad understanding that AI tools are good, they can already drive productivity, and they're just going to get better. So they'll be the framework for competition in every industry. So everybody has to adopt that. That $100 billion of revenue is flowing through the hyperscalers, right? Microsoft, Amazon, Google are providing almost all of it, so that they're getting that return. And then they're also providing that AI to other companies that are trying to use other models or use models internally or use open source models. So again, Microsoft, Amazon, Google have all the customers, and the customers are showing they want to use AI, they're willing to pay for it, and they're going to be willing to pay for it more as the AI tools get better.
I think it's a fair point. Amazon was raised to 375 by Goldman Sachs. I mean, it's hard to argue against if they're seeing the ROI, they're going to pay for it. Microsoft rebounding here now at 1%. Google having a great day, folks. Amazon really saving the Mag 7s here outside of Apple, proving there is no freaking reason that the CapEx spenders have to go down because the CapEx beneficiaries go up. Like, they should all be able to theoretically make a move together, which means one doesn't maybe have a parabolic move because
Okay, last trade
you
here.
have a limited amount of money. If all of it goes to one and none of it goes to the other, you get the parabolic move. But both Amazon and Micron should be able to go up together. Micron gets the benefit of the capex. Amazon gets the benefit of the cloud computing growth, which is not free cash flow positive today, but inevitably will be. Palantir losing 120 right there, down 2%. Fortunately, the software names continue to get hit, but the software names are also going down with the semiconductor names, which makes me think this is a little bit more macro here today. Ray says Amazon is going to 1,000. Yeah, dude, if they're doing $1 trillion of revenue on AWS, 1,000 would basically put it at a effectively $10 trillion market, a little bit more than that. I mean, if they're doing $1 trillion on AWS revenue by 2030 with 40% margins, they're probably gonna have 20% operating margins by then, if not higher, in 4 years. Multiple you put on that will easily be 20 get to $1 trillion, or you get to 10 trillion market cap. Especially if the e-com business is doing $1 trillion in revenue as well, which would be $2 trillion in revenue. Like even 5 times sales, you get 10 trillion market cap. So I think that's pretty obvious right there. It's just short term. The semis are the ones that are benefiting most from the capex. Amazon right there, 15.2%. That's green. What about the training trips? Yeah, but and that's like a $25 billion business they mentioned yesterday. I don't think it's still competitive with Nvidia. I mean, it's competitive, but I don't think it's taking away market share substantially from Nvidia. And we'll find out in the next week or in the next 3 weeks when Nvidia reports. But I expect Jensen to be able to get up to close to 100% growth, if not 95% growth, and keep their margins. And again, if we need more compute, whether it's Trainium, TPU, this is kind of Jensen's thesis on semiconductor index is going to semiconductor industry is going to 10x in general. Like, you're going to need Nvidia, and you're going to need a lot of Nvidia. Amazon still 272. Yeah, Camillo's got to be happy today. Camillo's got. Dude, should we call Camillo, bro? Real quick, let's see if he picks up. I'll tell him I'm live. I've never done this before, and just get his raw take on Amazon. Let's see. He's a busy guy, so I don't know if he's gonna pick up. Let's see. Chris. So Chris, I am live on my market open, and you're on speaker.
Oh, hey man, I'm just chilling, having a coffee, just fucking like solo, just like fucking, dude, I was just sitting here, just soaking it in, man. I've been fucking waiting for like this moment for so freaking long, dude. It's the biggest trading day of my life. Like it was the biggest trade I've ever made. Like,
okay, so I'm happy you picked up because we are obviously as a community looking at Amazon up 15%, and someone mentioned Camillo must be happy in the chat, and I was like, yeah, I think Camillo is happy, and so we wanted to give you a call. Just biggest trading day of your life. Can you kind of describe how you're feeling? Can you describe this thesis playing out, and can you give me your thoughts on why you think the street's reacting so positively?
yeah, I mean, well, first of all, as you know, Amazon, I'm probably close to 200 hours of deep dive Amazon research over the last 5 months, right? 5 or 6 months. It's been the central focal point of my entire year. I don't think anyone is obsessed over every piece of their business more than I have. So this is one of the highest conviction trades I've ever had, right? Like turned over every leaf.
Was it really 70% of your portfolio?
Dang,
Amazon. I
that
didn't know
sucks,
selling
man.
Amazon equity.
There's a question in the chat, and I'm very curious to see where you go with this. Is this gambling or is this conviction?
It's absolutely not gambling. Like I said, I'm 200 hours of research in on Amazon. This is one of the most well-researched trades in my career. So it's everything happening at Amazon is fairly transparent.
Right.
So it all comes down to a buy-in on CapEx. Are you bought in on what's happening right now? Do you believe the team? Do you believe the underlying drivers of demand that is fueling that decision to increase CapEx? It is insane, absolutely insane that the market is doubting that. Like as if anyone who's been following Amazon for 25 years doesn't understand what leads them to make those CapEx decisions. It's just mind-melting to me that people were as cynical as they were about those decisions.
I mean,
Like it's just
they grew AWS by 37% with 40% margins. I imagine, and the fact that they increased capex by 20 billion and the market didn't tank them, I imagine to you that was obvious conviction by the market believing the ROI thesis.
well, these are some of the nuances, right? So this is stuff I think people don't really pay much attention to, but we basically went through a CapEx cycle where management was able to properly assess the negativity around CapEx, and they realized what all the concerns were that the market had around CapEx. So these guys are really smart. Jassy knows what he's doing, right? Microsoft, they've been through this before. When they understand what the market doesn't want to hear, they can
Made a
then
lower low. Do we make a
basically
higher high
modify
now?
their messaging to what the market does want to hear. So they've had a couple quarters of pain, and it was obvious to me that they wouldn't only crush earnings this week, but they would know what to say. They would understand how to properly frame the CapEx in a better way for Wall Street, in a better way for retail investors. And that, honestly, if you look at the words, it's a lot of this is driven by the words that were used by management. The
It's
confidence,
a
the
higher low.
explanation. They went as granular to really explain it. Hey, in the event, in the odd event, the anomaly that demand falls apart. They explained it in two different ways. Microsoft is like, hey, we have the ability to kind of reallocate towards other resources. Amazon basically came out and said, listen, we're purchasing all of this equipment almost, immediately before the build out, and we have the ability to cancel those orders. So we can pull this back if for any reason the demand that we have on our books that is
All right,
solid.
I'm gonna close out the stream. I'm just gonna finish out this trade. It's almost out. I think it's gonna sell here soon, so